All right, I think we're just about at 25. I think we can just go ahead and get started. That'll give us more time for questions. I hope folks are prepared to throw some questions at Brendan and Gushle. I will go ahead and just introduce myself. My name is Alicia Balde. I'm based out of Silicon Valley in California, and I am the host of the Invest in Africa webinar series. This really came from my time doing startup ecosystem development work here in the Valley, as well as working at VU Venture Partners, and just recognizing there's a lot of, I think, misconceptions around how to invest on the continent. There's a lot of interest, but I think that the issues and realities on the ground tend to be a little bit of a barrier. And so this is really just to highlight investors and stakeholders that are doing really amazing work to help provide a framework for those of us that are, abroad and interested in looking at different ways to engage. As I mentioned, we're here with the team from Secha Capital. So we have Brendan Mullen, who's the managing director, and Gushle Nisi, who's the principal at the fund. They're going to graciously unpack the way that they're doing their investments in small and medium enterprises in South Africa, and now expanding into Southern Africa with their Fund 2. And so, yeah, I think this should be an engaging conversation. Just to set some ground rules, I will be checking the chat as comments come in. I may hold off on questions. If it's a question that I was already planning to ask, I'll kind of throw that in. Otherwise, we will have 10 to 15 minutes on the back end to ask them questions specifically. But again, welcome to all of you. And just for the sake of engagement, feel free to drop in the chat where in the world you're coming in from. It'd be great to get a sense of if folks are in the US or in Europe or on the continent, just so that we can also tailor the conversation to what's relevant for folks that are here. I think with that, I will go ahead and pass it over to you both just to do some personal intros, and then we'll get started with the conversation.
Great, thank you so much, Alicia. Thank you for having us, and thank you everyone for joining. Really looking forward to engaging. Tell you a little bit about the story of Secha Capital, also to hear some great questions and learn from you all. We certainly have a lot to learn. We've been at it for 4 years, but hopefully 40 more. Briefly with me, and maybe I'll just, the one time I show a slide until we get into any Q&A, I'll just show a picture of the team. So I am originally from the US, as you can tell by the accent, the only one on the team from the US, so apologies for that. But I'm originally from Boston, worked in finance for a few years and did my MBA, and then joined Bain & Company in the Johannesburg office, where Secha is now based out of, which time I met Rashil Valab at Bain and Dr. Nambuso Kumbule, our co-founders. That was about 4.5 years ago for Secha Fund 1. In the intervening years, we brought on Yusuf Sheikh from BCG as principal, Kufe from PwC and Goldman, who was about to introduce herself, and then Seema Lalu as a fellow. Yeah, without getting into the Secha story, that's kind of a brief intro on me. Pass it off to you, Kufe.
Thanks, Brendan. Evening, everyone, or morning, depending on where you are. My name is Gushle, and I'm really excited for this conversation this evening. So Brendan briefly mentioned, I joined Secha last year. I did my master's in development finance at the University of Cape Town, worked in PwC and Goldman Sachs, and after that did and majored in development finance, and then had to make the big decision of what's next. So I decided not to go the DFI route, found Secha on YouTube, and yeah, I've been there since last year. I actually joined as COO or fellow, and I was COO of Rush Nutrition, an investment that signed actually the day that I started. So I'm really excited to share just more about that process and how it's gone. And this year I came in the position of principal, and I'm now working across our portfolio, and yeah, really looking forward to this.
Awesome. Yeah, thank you both again for being here.
Sure.
Fun fact, I didn't realize this. It should make sense that YouTube is the second largest search engine behind Google. I
Yeah.
had no idea, but I was like, yes, this makes total sense. So fantastic. I think maybe from here, let's go ahead and just jump into a little bit about the fund. So Brendan, could you share a little bit about how the fund came into existence, kind of what informed the investment strategy and the thesis and the approach in general?
Absolutely. Above all else, Secha believes in human capital complementing that growth capital that goes into small and growing businesses. Full stop. So what does that mean? We get the best and the brightest in Southern Africa, like Kuhle, and second them to the Rush Nutritions, the Cultura Freshes of the world. If nothing else, again, Secha is a conduit from people like Kuhle and Sima and Yusuf that would normally go to a Goldman, a BCG, a Bain, ENS, and get them into these businesses that really need that human capital. We don't charge for it. That's part of the investment. That's part of the growth capital. So we're backing up. We refer to ourselves as early stage impact private equity. We invest in sectors that are maybe a bit boring or certainly unsexy of fast moving consumer goods, or CPG for our American friends, agribusiness, and light manufacturing. We like these sectors because they're massive, kind of traditional sectors that have yet to be tech enhanced. And it's generally where there's a lot of precedence for returns, financial returns, massive employment opportunity. That's our primary KPI is job creation. But most earlier stage funds ignore them. And then here in South Africa and Southern Africa, there is actually a fairly deep pool of larger private equity funds, but they're a lot larger. So they need to write much bigger checks. So the Secha model is, in finance term, is growth and human capital arbitrage. There's massive inefficiencies in this system. In impact terms, it's bridging the management gap in the missing middle. The origin story of this was long gestating. I mean, for some of you, the cheesy line is that was in my B school essay. But I worked at SJF Ventures for a year when I was at Duke, and then came here with Bain, and that's really when working with Rashil and talking to Nambusa, who's a doctor but has an entrepreneurial background. It was compounding effect of the multinationals here on the continent have really hollowed out a lot of the management gap. And then there is that massive gap. There's just a massive amount of SME opportunities. The US is, and these sectors especially, are kind of static oligopolies, and these are dynamic, fragmented markets. And then the last thing is, we borrow very heavily from the search fund model that's a lot more popular in the US. Mm-hmm. And looking at that with an 8x MOIC at 30% plus IRR, and just nobody's doing that here. So again, it's a market opportunity, and that opportunity is massive opportunity for job creation, and that's there's many things we're trying to solve in the world, and we do map the SDGs. I can get into that, but the unemployment numbers here are huge, and it is generally because it's very difficult to hit that inflection point for growth of the SMEs.
Do you mind just sharing for those that may not know what exactly the search fund is and how that model typically works in the US?
Yeah, sure. So again, we're not a search fund, but we borrow heavily from it, and it's because it's getting smart people into boring businesses. And in the US, it's some whip smart MBA, and it's usually a he. So that's changing greatly, thankfully. Usually from McKinsey, and then on to GSB, and it's the tagline is the good tagline is entrepreneurship through acquisition. The cheesy one is like be a CEO before you're 30. You raise a little bit of money to go search for it, and then you raise additional money to buy an equity stake, and then buy out the business to eventually have a majority share. You with your so it's somebody who's retiring or wants to get out of plastic manufacturing, or window washing is a famous one. Retirement homes, and then maybe you build them up, and then you do it for 4 or 5 years. You add margin, you add a little bit of revenue, and you sell it at a higher multiple to another strategic or private equity fund. It's not really an impact story, but because the rents are out of the system there, and it's generally red ocean, it's improving operations. We feel here there's a lot of companies like that in these boring sectors that you can improve their operations, professionalize them, put them through the car wash of financial reporting, team meetings, using a calendar, sometimes things like that. And then massive kind of blue ocean of channel access, new market exports, And that's the fun stuff for us. We like to get our hands dirty, and I think we're going to get to it. That goes into borrowing again from the consulting toolkit of doing the 100-day plan, the 9-month plan, and really trying to make sure that 80% of our time is growing the SMEs, collaborating with them day to day, apprenticeship model at the SMEs office, not at the Secha office. And then the rest of the time is some of the, the fund, administration and things like that. Kufle, did I miss anything from that?
No, I think that is everything, Brendan.
So it sounds like you all, as far as the founders, saw this gap between lack of, I think, management, human capital being able to trickle down into small businesses, also private equity funds not really being able to access small businesses because the check sizes were too large. And so you're like, we can kind of sit in this middle ground from both a talent perspective and a capital perspective, and then help accelerate some of these companies to get to a larger stage where then larger private equity can actually engage. So then I think from there, where does the investment strategy itself come from? I think something that's really unique about what you all are doing is how de-risked some of the companies are, and the approach where it's not like for a traditional VC fund, and of course you guys are PE, but for VC for perspective, you're looking at a bunch of different companies and saying, okay, out of all of these, this is the one that's doing well, without necessarily building a solid thesis around it. Whereas you all are coming at it from, here's a thesis, we're looking for this one company to fit kind of this profile. Can you kind of speak to the way that you all go about, well, I guess first the way that the investment thesis was developed, and then how you all are going about identifying those companies?
Sure. I think I'll speak to that one. So you did mention, Alicia, that our model is quite unique in terms of being investment thesis driven. And so I actually want to answer that one just on an example. So actually, before I joined Secha, the first investment was Native Child, which is a natural hair products company, which I use. And the thesis was driven around noting that this is a big market for Black women. There is a challenge in the market, and there is not a lot of local producers playing in that market. And so based on that thesis, Secha then went out, found the different SMEs that are playing in the space, and then attached the need of financing or specifically working capital in order to help Native Child grow. And so I think that approach allows us to go into the market knowing exactly what we're looking for. A lot of times we have a clear list of the type of company we want. It can be slightly different in a sense, it's going to be different in a plastic manufacturing company in terms of the attributes that we're looking for. We're looking for the growth potential of the company. And then we are reaching out to experts in the space. Brendan did mention that we have a very strong and diverse team that have links all over, and reaching out to that network is very helpful in finding these SMEs that we bring into our pool and have conversations with them to drive our investment approach. Is there anything I missed out on that one, Brendan?
No, but just in terms of de-risk, I think it's important to note that these are established companies, to your point, both Alicia and Kufle. So yeah, we don't invest in startups. We don't take tech risk. These other people are there to do it. We probably need more players like that in Southern Africa, but it's not our lane. In these companies, we always say they've gone 0 to 1, and that's where we intervene. So positive, gross profit, maybe even break even or profitable. So to get that, from 1 to 10, it's a very clear path. And at that point, you can start pulling dividends if you want. We're patient capital, so we don't. But that does de-risk the fund in that regard. So we don't need, one DoorDash or Airbnb, as we saw last week to return the fund. If we have a series of on base, that's a pretty decent kind of return on capital.
And so, as you all were developing this thesis, what was the receptiveness from LPs? How did you approach LPs? What was their response? What are they looking for from as far as a return profile from your fund?
We have all sorts. So our first one was a $5 million fund. explicitly in South Africa. Fund 2, we've had a first close. Fund 2 is a $30 million fund. It's still largely, high net worth individuals and family offices, and we're speaking to more and more institutionals, so no money in the bank. So I would say we've had great success with family offices and high net worth individuals who are looking for impact, but want to see how they can get their money returned. And I would be the first to admit, in the impact scale, I don't know, maybe not light, but there's definitely a more extreme version of, heavier impact focus. We fundamentally believe in this case, you can have returns and you can have your impact. And that's where we've seen a lot of appeal. Speaking to this audience, a lot of the African diaspora, and especially the South African diaspora, really want to find a way to give back. And for Fund 2, that's why we do have a USD kind of GP, so we can filter that money in. Mm-hmm. And in businesses like this, I think it's nice to have a tangible product, like as Kuhle mentioned, Native Child's the easiest example. That is a tangible product. Santo is really inspiring entrepreneur. She's using the Flutter Waves and Paystacks of the world that we do read about in the press. And you can just see that every 50 Rand that you spend on a Native Child product, you have a few of them up there, that's 50 Rand that stays here, that doesn't go off to Unilever or L'Oreal, and stays in the ecosystem. So people really resonate with that story. And I would also add, I guess, the majority of our investors are also women, and it's because, that was maybe that default gender lens. If you just look at our portfolio, it's, in terms of investment themes, Native Child, Hair City, and Burkina are all female founded and run. Rush and Taste of Waterberg, Pasadena, iGen, they're all female founded, and that wasn't the plan in order to capital raise, but that story resonates when you tell, when I can walk up to a woman and mention that because of Hair City, I know the difference between a Peruvian 4x4 and a Brazilian, full frontal, that helps establish credibility.
Sure, they're impressed. So it sounds like then a lot of the LPs are HNIs, and they're just looking for ways to both have an impact locally, stimulate local business development and job creation, but also have some type of financial return. Can you speak at all to, and I'll preface this by saying a lot of the way that the Silicon Valley ecosystem was built was around just a lot of HNIs being able to invest their money in early stage companies. And I think it begs then this question around fund development on the continent of really engaging folks that have access to capital to reinvest locally. I'm curious, it's interesting, one, that it's a lot of women, but also could you speak at all to kind of what the HNI kind of landscape or appetite is just broadly with reinvesting locally? And even if you have some perspective on what that looks like in other countries, say Nigeria or Kenya, that may be a bit of a stretch, but for whatever you can share.
Yeah, I'll take it. Yeah, I don't claim too much expertise. We haven't really looked outside of South and Southern Africa for high net worths. We talked to other funds, and obviously if you're talking to DFIs, we don't understand. So I think, one, we're pretty lucky here in South Africa because there is a pretty deep base, and we've been lucky enough to be able to tap into the family office community. Yeah, most of our investors are entrepreneurs. So, I mean, there's one that had his liquidity event. So it was him in this case from Ethos. There's a few that made their money in the last 20 years and are looking for a way to give it back. I would say that if we didn't have the impact angle, I don't know that they'd be investing in South Africa. I think there is a lot of money leaving here because the dollar's safer. And it is my adopted country. As I was just, Kuhle and I were talking earlier, I was crying this weekend over the rugby documentary. Springboks won last year, and that's when it really hit me. I mean, it hit me before, but yeah, I think it's a bit of a struggle to keep the money here, especially if I can't imagine how difficult it would be if we didn't have an impact lens, or couldn't lead with that impact story. If it was just purely financial return, I think you can find that elsewhere. I think.
That's interesting, because then it creates a compelling case for having an impact focus, right? It's like, it can't then just be about the return, because if my currency is going to devalue locally, then I might as well, if it's just about the money, I'm going to find somewhere else to invest. So it does create a compelling case, I think, for impact as a lens. Switching gears a little bit, so we've kind of talked a little bit about the origin story and kind of at a high level what the fund is looking to invest in, who's investing in the fund. Could you share a little bit about the operation side? So how are you all kind of developing your pipeline? And maybe I'll start there and then we'll kind of deep dive.
Yeah, sure. I think I touched on it a little bit earlier, just about our investment thesis approach. So I'd start with where we decided that we want to play. So our first fund was mainly in FMCG, and that's where we have expertise. We invested in 10 companies in South Africa, and now we're looking into agribusiness too, healthcare, light manufacturing, business enabling services. So we're broadening the fund. But even in that and going into different African countries, we're still basing it on an investment thesis approach. And so what that looks like is that actually this morning and this week, Monday today, it's having expert calls with people in these countries, or specifically in South Africa, and asking good questions to find out more about the country and which sectors are the best to invest in. And we build the company that we're looking on based on those conversations, understand the market. Earlier this year, I got a deep dive into resins for plastic manufacturing, and understood really, what the healthcare market is looking for in terms of plastic goods, and therefore building my understanding of what kind of plastic manufacturer we would want to invest in. So that's the overall approach that we take when looking into the pipeline or the deal flow.
And so
and
then,
I would just,
oh, go ahead.
yeah, I think it's worth adding, apologies. Since we're so operational, we have a greater line of sight of these sectors. So Native Child did lead to our investment in Hair City and then Wukina, which is the wig and weave market. Again, as a naive guy, I would have assumed natural hair care is contrary to wearing a wig or a weave. But as we got to know better, as we worked with Santo and talked to the buyers, we realized that actually those can be quite complementary. And then you talk to a buyer at a Clicks or a Discam, and you find out what they're looking for. And because we have those relationships, because we have those boots on the ground. So it's a unique perspective where we really get in deep and we understand those pain points a little bit better and understand that ecosystem. I think what Kuhle learned at Rush Nutrition with food immediately helped us turn down a recent investment that was pipelined from another strategic, because Rush is mostly energy bars, but we do have some liquids. And Kuhle was just like, listen, this stuff's too heavy, the margin's too slim, saw it at Rush, this is a no. And that probably saved us a month of due diligence from a really smart investor that passes along the deal.
Yeah. So it sounds like
that helped.
What you all are doing then is you've selected a couple of industries at a high level, and as you're having kind of conversations and doing some research on the opportunities within, you're saying, here's kind of like what we're looking for. And then as you're having conversations with companies, being able to kind of narrow or chisel that into like what the ideal profile looks like. But then of course, in that process, gaining additional insight into where additional opportunities within that industry might be.
Yeah, I like that framing. And I would also add that we get worried if other people investing there. We don't want to be trendy, because also, again, it's an inefficiency, or we're trying to bring a new perspective, or agile capital. So even our last two investments, I think, are probably our trendiest. iGen, which is battery storage, and Cultura Fresh, which is hydroponics. We're always asking, like, can we, as Secha, really invest in renewables and then, kind of water efficiency, but we ultimately decided that it's a localized solution. It's differentiated. It's a different part of the value chain, probably the most ignored. So we imagine we'd rather to sell the line. We'd rather sell pickaxes in a gold rush, right? Like we'd rather be part of the rising tide that can sell into a lot of different areas, because that's really where we play the heartbeat. We're not on the efficient frontier of a lot of those things, but we're riding that growth curve. And even if it doesn't, those are actually kind of the call options. We'd rather have a big enough market, and then the market can grow, and then we can also grow with exports. So you really have to start there.
So there's a couple of questions that have come in around kind of percent ownership and IRR of and ROI of the fund, but maybe I'll hold that until asking this question first, which is, can you talk a little bit about your your due diligence process once you've identified a potential company?
Sure. So our due diligence process is done internally because of our approach of having an investment thesis approach. By the time we're having a conversation with this SME, it's usually quite aligned with what we are looking for in the market. And so we're going to be on the ground, we're going to be with the founder, asking for all the information that we need. And actually what we find is that the due diligence process is the best time for us to build relationship with the founders and get to know them a little bit more. And it helps when now we've made our investment and we're working alongside them, and we're not just these investors looking over them and asking them to give us something at the end of the month. So we are part of the process. All of us as a team come in. One of our team members, Seema, I think she was in the picture in the beginning, she has a law background, we have finance background. We bring our different skill sets to conduct that process.
And my understanding of the fund is, so you guys are 3 years into fund 1 and have made 10 investments in that period. So this is actually, sorry, you're year 4. Okay, 4 years in. So 10 investments in 4 years is I guess what I'm wanting to highlight is how long the process essentially takes to get to an investment. And maybe if you could speak to kind of how the significance of that, or if that matters at all, right? As far as finding the appropriate companies for your portfolio.
Yeah, I mean, I don't think our due diligence process is, aside from the investment thesis and then the co-creation with the value add plan. Those are, I think that area. Otherwise, it's, our kind of data request and legal request looks pretty similar to a lot of others. Maybe we can move faster. Maybe since we're operationally involved, we can de-risk certain things. Stoffelberg didn't have a website when we invested. Like the total lack of marketing ability would have been a red flag, but we were easily able to slot in on that. Let's see. Just looking at the iGen, I would not say had a proper go-to-market strategy, but we had done B2C go-to-markets with a number of companies, and now we could bring a little bit of that B2C to the B2B world, and we were confident we could do that. So we can move pretty fast, but it's generally because we have those long gestating theses. So I gotta go back to the Hair City one. That was probably a year and a half that we knew we liked that. And I think I mentioned to you before, Alicia, we really like the Maven model that's out of the Bay Area. And then we felt we internally tweaked it for our market. And we just had a one-pager, passed it to everybody we knew in the kind of the dry hair market, as we call it then, wigs, weaves, wefts. And eventually we were connected to the right team. But once we find it, it's yeah, I'll be honest, it's probably not as robust as other companies. I mean, we obviously have the KPIs of, GPs, everything, the right team. And then the path to growth, and then the legal DD. There's obviously a few areas, but after it's really recognizing the thesis, the team, and then the growth path, and we can be a little bit more relaxed about other things. Again, because our check sizes, maybe we haven't hit that hard yet. Our average check size is about $250,000. So with that, you can't bring in Weber Wenzel, you can't bring in a third-party diligence team. We're trying to create a capital-efficient model here. Maybe we'll miss something. Knock on wood, I don't think we have as of yet. But moving that fast. But with that check size, it's you can make those investments. Yeah, the pace does seem fast. I guess it's almost 5 years. So yeah, the plan is 2 investments for at least fund one. It was supposed to be 2 investments every year. One of the MDs would lead it, and we'd have a COO, or now what we call operator investor underneath that. And that cadence has worked out a little bit luckier than just planned. I think as Kukle said, we somehow timed it when she started the day we invested in Rush. That was luck, but that's happened to us a number of times. So I'd rather be lucky.
So it sounds like because you have the robustness of the thesis and the amount of research that goes in on the front end, that's really where a lot of the research and the time is spent. And then once you've found a good fit, once you get into due diligence, it's pretty standard processes, and then you're deciding whether or not it's a go or no go. Could you actually, so maybe I'll circle in on one of the questions here. Could you speak to what % ownership Secha current usually goes for? And then we can just kind of speak to this question as well, just the IRR and ROI of the fund.
Sure, I'll just speak on the percentage ownership. So we, like we mentioned, we take a minority stake, and we believe that having the founder have as much stake in the business as possible is what will grow the business. So we will take between 25% to try keep it at about 40% stake. We are looking at increasing that stake as we're building the fund, because it can be difficult, to with the check size that we want to put in, get that specific percentage in the company. But that is our ideal. The ideal is to make sure that we can keep the founder, make sure that the founder is incentivized to also work hard alongside us, and we're not just replacing the funder with our skills. Brendan, do you want to take the IRR?
Yeah, sure. And I would just add for the equity stakes, by virtue of the companies we invest in, they're not going to have a series A, B, C, D, so right. We're not too concerned about getting diluted or even our, dragon tag rights. So, a nice significant chunk should exist for a while. And also we don't need to worry, so that therefore even what other people would call a decent return would be massive to the entrepreneur and to us, because we're going to own a good chunk. It's not going to be a very messy cap table. As for any other kind of metric, it's pretty standard private equity. I'm pretty confident. I think we can outperform it by virtue of there's going to be just deal fever for the lack of pipeline from some of the larger, with all the dry powder on the continent right now. But yeah, 20% plus IRR, minimum of 3x return on capital. Right now we have an internal valuation on Fund 1 at a 5x. Oh. And again, that's 4 years in. That is, led by a couple of big winners, but everybody at least is growing top line margin and creating jobs. 120, I don't know the recent number. 120 is the round number since we invested that we've added, and 15 of those are since lockdown started, since March. So we've added jobs since then, which also is pretty cool.
Maybe just to double click on that quickly, with COVID, do you find that because you're already finding profitable companies, they may have been impacted significantly by COVID, but do you find because of the thesis that you have, they're a little bit more resistant or resilient to global pandemics or any other kind of out of the ordinary events? I mean, I think no one's totally immune, but I'd be curious how the portfolio is doing given COVID.
Yeah, it did really well. I mean, what we had here in South Africa is, I think we had it globally, right? Like the essential services that could stay open, right? So again, we feed, clothe, and cleanse, the country, the continent. So demand was high. Some parts went down, were lower because of different shopping patterns, but all of them had e-commerce components. So yeah, I mean, they grew. We had no permanent layoffs. The investments we made, even, they definitely got hurt, but they persevered because, energy and again, vegetables, that's pretty crucial. I think with iGen, the battery storage, that's when we had to do the EBITAC, that everybody talks about, because it was tough to not, kind of cram them down on the valuation. But yeah, we didn't, we just doubled down on our thesis. These are defensive, companies that luckily, for two reasons that they were able to persevere. I mean, for many reasons, but from what Secha brought, that, you know, they did most of it. But their kind of admin was straight, so we could kind of apply for some of that COVID relief, which really helped because working capital was constricted because our suppliers were got tough. And then secondly, we were able to just throw a lot of human resources at the online sales, which went up massively. Quickly, Rush, which is not historically done a huge, you know, energy bar, is not a huge online. That's more impulse at the forecourt petrol station or a gas station in the U.S. It's been that long.
Yeah.
But it was up. It was up significantly. I can't remember the number.
Yeah. So just to speak on that one, I think Rush was the perfect example for me. So coming in, one of the first things that we wanted to drive is getting Rush online. And doing e-commerce sales, and you know, it's a healthy snack bar, so we want to be in all supermarkets, but we really felt that it was also important for us to move online. And so going into COVID, it became like invaluable. You know, we increased sales there by 6x, just online sales, and for quite some time that was the main driving force for Rush staying up. And you know, this was a desire that the entrepreneur had for a very long time, to move online or to increase the online presence, but capacity. And so having Secha involved to drive that process, that was always on her mind. And then it being a huge benefactor in this challenging time made a real difference.
Yeah, maybe just to add, just to compare, like e-commerce in South Africa is tiny. It is not. It's very difficult to build a business on it. So Native Child was pretty much e-commerce only when we came in. And believe it or not, we were just weighted distribution. So channel access. We got into every major retailer.
Right.
And then I really think that just as much as Instagram, though Santa's been massive with that helped awareness and your classic marketing funnel. So when all those stores closed or at least were restricted, everybody that's had seen us at Pick and Pay or Discount or Clicks, like I can't get my Native Child. Now they went online at a vastly superior margin for us. The other example is the biltong company, so beef jerky in the U.S. The average biltong company or beef jerky company, well, not anymore. That's been a reinvigorated market, but they're not on DoorDash, Uber Eats, things like that. I mean, it sounds silly, but they're not. Like they haven't taken the time. Now, obviously, post-COVID more are, but we were already there, so it gave us just a massive new channel on which to sell, and that was helpful because the payment terms with some of the retailers were getting stretched. We were getting kind of tucked or hurt on both directions. So to be able to pivot to some more direct-to-consumer channels was a massive win.
Wow. And maybe double clicking on kind of the ways that you're working with startups during challenging times or normal times. Can you speak a little bit about the investor operator model and how that works?
Yeah, sure. So I would love to speak on that because I am the operator investor. And for me, that was the main draw to Secha Capital, if I'm being honest. So how the model works is that Secha Capital invests in SMEs, as we mentioned. And what we do is that we place someone like myself in the SME. And so I played the role of, I would say, in between the investor and the SME. I became the right-hand woman of Lara, who is the owner of Rush Nutrition. And on my first day, I created a strategy, what we call the 100-day plan. And this was built during the due diligence process. I formalized it, presented it to the founder, and I was working with Rush Nutrition over about 9 months to implement that plan. And so along that journey, there's a lot of exchange of skills. Working with Lara as the founder, she's running an SME, entrepreneur, skills that I didn't learn or I wouldn't have learned in any other position. But at the same time, I'm working with an MD from Secha. And so there I'm coming with the consulting toolkits. I'm looking at it from an investor perspective and then implementing those changes in the organization. And I think a big aspect of it is, I'm coming in, there's a lot of roles that I'm filling on behalf of Secha Capital in the COO role. And I'm also part of the hiring process. So I also transfer my skills to new hires within the SME, making sure that after that 100 days or 9 months or 12 months of the implementation, there's someone to take over what I've been doing. So there's a lot of exchange of skills along the process. And even within the team, you know, things that we learned from Hesity, I share it in a Friday meeting. There's something bothering me at Rush Nutrition to do with Facebook. It takes 2 seconds because Yusuf, our other team member, did it already with Hesity 2 weeks ago. And so that's really how it works. There's exchange within the Secha team, the MDs. I'm learning from Lara, and I have invaluable entrepreneurial skills now. Yeah.
And so how long, it sounds like it can be anywhere from 100 days with implementing that plan to a 9-month period. Is there a standard incubation period? I guess at what point are you backing off and moving on to another company? How quickly does that happen? I think there's two principals currently. So I'm curious how that all gets divided between the different portfolio companies.
Sure. So I mentioned the 9-month plan, but now we've extended it to 12 months, actually after I shared with the team and I said, we need this to be longer. It's too soon. I don't want to go.
9-month plan, it just takes 12 months.
It just takes 12 months. And I think that's the normal pain point, right? We have this perfect plan. It's on slides. We have the documents up there. And then sometimes you're trying to get Rush Nutrition into a gas station and you thought it would be 2 months and it actually takes 6 months. So I would say that we start off with a 100-day plan, and that's just to make it bite-sized for the founder and make sure that we are hitting the quick pain points in the beginning. But alongside that 100-day plan, we've created a 12-month plan. So we're going to start with that 100 days, make sure that we're addressing the key things that the founder wants us to address. And then the 12-month plan is where we see the business growing and the things that we want to set as foundations for the business to grow. Yeah, so I'd say let's use those two, 100-day, 12 months. That's it.
And how, I guess from a financial perspective, my understanding of, at least for a venture firm, you're getting a 2% management fee, and that's what you're able to use to pay your staff. How then does Secha Capital manage paying for like this role? Since I'm assuming that it's not the portfolio company that's paying for the salary of the investor operator.
Yeah.
Yeah, it's a good question, and it's something that go on for a long time. I'm a big believer in having to tweak fund economics. But ultimately, so the short answer is, if you look at our fund, we're still pretty small. We've just kind of flipped the normal org structure. So fewer older deal makers. Actually, I'm not a deal maker. I don't know why I'm pointing myself, but fewer older people. And that's what, Kukley is still fairly young in her career. So she's cheaper than a 45-year-old person at the end of their career, right? So that's, again, where we borrowed from the consulting model of that pyramid, not the inverted pyramid, right? So it's, even at SJF Ventures, which is a fantastic experience I had, or talking to friends at Big PE, it's a lot of people on the deal side, and then you have a few analysts that are your sourcing associates, and then your value add team is off to the side. We've just allocated the management fees to go into the SME. Now, as we grow for the second fund, we we'll obviously have more capital allocation for that. Sometimes there's ways to complement that with a supplementary capital. But when we make the investment now, we will add on the operator investor salary for 1 year to the SME. Thus aligning incentives more. I don't think it's going to make a change on the equity stake we get, but it's proving that this, so Kukley right now is working a lot with Culture Fresh. We want Culture Fresh to feel like Kukley works for them first and Secha second. That's going back. It's about aligning incentives. Now, we don't want Culture Fresh to see her salary coming off every month, because it's just, you don't want an SME to think that way. They're frugal. They are frugal. Again, not burn rates here. People, it's tough to get them to spend money, which I respect. But that's really what we want. We want them to see our capital injection as great capital. And then from day one, they know that we have an operational model. So we know they're only going to take our money if they want to work with us. Now, they may be a little suspect But then when they see what I have no idea how old Kuchle is, a 25-year-old running circles who may not be an expert in inventory management, but after 3 months she will be, and that's exactly what happened at Kuchle at Rush. Kuchle is now like figured out how to recruit an NFT hydroponic engineer. I'm not even sure I got the acronym right, but she knows enough, and she found the right person, and she brought a lot. Those are very transferable skills. So we always like to say, I'm going to butcher the analogy, but the dance moves may not change, but the order absolutely does, right? And so that's why we have that 100-day and 12-month plan, because it's not just a playbook that you follow. Each one takes different skills, different capabilities, even if there's the same set. And that's the fun part. So once Kuchle works with 2-3 companies, she will have mastered every capability, and then she's going to leave us and start her own business, and I'll be very sad.
Or fun.
But exactly. That's absolutely.
I could do either at this rate, Alicia.
I totally believe it. So we're rounding out on time. There's a couple of questions I wanted to ask, but I want to make sure to leave some time for the attendees to ask questions. Maybe just with these last 2 minutes, could you just speak to how you're thinking about the exit potential of the portfolio? And then we'll kind of wind down with a couple of reflections just on like, what are the high level challenges? What should people know? But maybe just starting with exit potential, how are y'all looking at that?
Is that me? Do you want to take?
Yeah, no, you can go ahead, Brenda.
Yeah, sure. So again, these sectors have precedence for returns in the JSE, the Johannesburg Stock Exchange in this continent. There's a lot of strategics that have come in here. So it's a lot of like the standard things, but they're standard liquidity events, but with a few more kind of arrows in the quiver. So we've already called for dividend on a few companies. Really, that was the entrepreneur's focus. We weren't asking for it. Multiple of our portfolio, we've had local strategics reach out because again, they can't reach out in consumer in the same way that Native Child, Rush, G-Step can. And then there's all that dry powder in the mid-market. So secondaries, I do expect will probably be our biggest kind of return valuations. Again, dry powder, pipeline. That's all we hear from the big boys of Mentier, Ethos, Actis. We're still a little ways with a few of these, but we expect that. And then obviously, listing. These are proper companies in their own right. They still have a way to go, but we have alignment with our LPs, and we're also ready to push back to give us time to make that happen. I think 4 years in, so far so good. Not all of them are going to grow 25x like Native Child, but they're all growing. So we see multiple liquidity events. And again, going back, I can show you a stylized example. When you write up that small check at a low valuation, you get some growth. You don't get diluted. If you increase top line margins, brand, so that doubles, triples the multiple on a double or tripled top line or EBITDA, you're starting to talk some pretty significant returns.
Mm-hmm. And are you all looking at a 10-year to exit? I guess I'm curious how long you think that the exit is, or when the exit will happen.
Yeah, I mean, we're a fund one was a holdco, so we'd rather wait because I'm just seeing the growth. But we're like I said, I could talk for hours about how I'd love to tweak kind of standard fund structures, and we've we've accepted that we're going to fight for the human capital component, but this one is an LPGP structure. So yeah, 10 plus 2. So we're going to have to invest up front and then grow and harvest towards the end. But again, other private equity funds on this continent right now are extending 2 years at a time. So if they can do it, we feel like we might have found a way to do it in the same time period.
Yeah, absolutely. So I think right now I'm just going to pop over to the chat and pull over a couple of questions that I saw just to make sure that we get them answered. So, and then for those that had questions, please feel free to throw them in the chat or into the Q&A, and I'll try and get those over to Brendan and Guchle. We got one from Darren. Are you finding opportunities in South Africa where untransformed businesses with older managers are looking to transform candidates to take ownership upon their retirement? Let me know if you'd like me to repeat that again.
No, got it. So that's very much kind of like a classic search fund business. So transformed is kind of the call option. So for the uninitiated, transformed is Black economic empowerment. And the deal Kusle was talking about the resin. It was a plastic manufacturing company. The founder was second generation. He was leaving for Australia, as many South Africans are doing. And it would have been we were with another investment fund or a pledge fund, I guess it would be considered. We were going to invest in we're majority Black owned. They are 100% Black owned. It was going to be fantastic. He eventually got cold feet, or we couldn't agree on a number, but yeah, that's a lot. And I know there's some people here working on kind of the more search fund component, because I guess the second component, we're generally not looking to have the CEO leave. That's probably a big thing that's different for us. But if there was a gradual apprenticeship and handoff, that would be fine. That'd be awesome if our operator investor after 2 years took over. But I'd be a little bit worried if it was day one. I mean, you hear that from even in search funds, you have a handoff period of ideally at least a year, but I'd be more comfortable with 2. I always say I've been invested in the Biltong company now for 3.5 years. I could not be the CEO. There's some things I could do, but I could not run that show. I still can't tell the difference between a kudu and a eland. I could for a few days when I was really, but yeah. So, but yeah, that's a very good question. I think there's massive opportunity for that. So what we're hoping is, if the search fund kind of asset class sphere grows, we're happy to then invest once the investment's made or as co-investors, because there's a lot of that brain, people leaving untransformed, like huge opportunity. But we also, I'm going a little bit long and I apologize. We've seen that if you get too much of that capital that's not agile, it can slow things down. So if you're doing a deal just for empowerment, I think that's great, but that's not our lane. We want people to be motivated to grow it and to see the business case for it, not just that.
Then we have another question from, I believe it's Meseret. There are a lot of local high net worth individuals, but challenging to get them engaged in investing. How can local angels investing be developed? I actually may be able to take a stab at that if like. Well,
Sure.
my understanding is you have a couple of organizations that are angel investment groups. So you have ABAN, I think in South Africa, I think it's SVAN. There's an acronym for it. But there are organizations that are putting on workshops and trying to train HNIs to become angel investors. I even think Victoria Ventures out of Kenya is also running another program. And actually, interestingly enough, Venture University has a venture accelerator model that they're looking to start in South Africa as well. So I think we're very much on the cusp of the education for that. But that's my perspective from, being in California. I don't know if you all want to comment on that as well.
No, I don't have much to add. It's an ecosystem. So much like the other people that are proper search funders, we're happy with it's great. The more the merrier. I think generally we found that angels are more VC focused.
Yeah, that's true.
So we don't, but they actually did come to us. So they're trying to. This was a few years ago. There's like a native child competitor. So we shared our Nielsen data with them. So we stay abreast, but and then just and generally, I shouldn't say generally. I found that they generally have inbound pipeline, and we're very outbound thesis driven. But no, it's awesome. I mean, they're doing great work.
Mm-hmm. Then another question from Maria was, how do you deal with the excessive hurdle rates in South Africa?
We outperform them. Short answer. Yeah, no, I don't have much of an answer. I mean, economic theory. Yeah, I mean, the interest rate here is quite high. Mm-hmm. And then with the hurdle rates, yeah, I mean, with the IRR we're expecting, we hope we don't need to worry about it.
Okay.
I mean, if she could elaborate, I'm happy to.
Sure. Yeah, if you want to.
I don't know what excessive. I thought a hurdle rate was pretty standard. Maybe I'm wrong.
We have another question. Considering relative smaller size of SMEs, do you find that companies not investment ready? Do you find the companies not investment ready, and do you do much to make them investable? I think that's kind of speaks to what you all have, kind of your model in general, but if you want to touch on that.
Yeah. I do think that they are more investment ready than you would expect. So I think, we have what we see as the ideal African business. And I think we've looked at simpler things. We're looking for founder run, a simple revenue model. We're looking more at margins. We're looking at businesses that we see as being expandable. There's a clear market there. So the businesses we're looking at are the missing middle. They've proven that they have a business that people are interested in, and now they're looking for the next step. So they are investment ready, and we are actually making them more investable for our future, if I could put it that way. What we were saying, in terms of what we see as our exit approach, that's what we are doing to make them more investable to those customers. But there's a great market of very investment ready SMEs in the country, and I think in Africa in general.
Yeah, I think that's great, Goulet, and I'll follow your poetry with prose. I mean, the other thing we do, we put them on Xero or Deer or various ERPs, so it helps them scale, but it's also then much easier for an additional investor to come in and take a quick look. Or we clean up the shareholders' loans or things like that, things that we've now done multiple times, so we're getting pretty good at it. I don't know that we started that expertise, but there's definitely that car wash that we now know the call outs to run them through. So that when you do apply for that working capital loan, you're not like printing off PDFs, you're just giving login access. So
yeah,
absolutely. And it looked like we got a follow-up from Maria. It is to comparing to funds in other countries, especially when looking at raising money for the fund. This was a specific challenge I personally dealt with when raising money for a fund in South Africa. This posed the question to the local fund in South Africa or not to locate.
Okay, so maybe with Forex involved, it makes it that much more difficult, would be my guess. And
same.
Yeah, so I don't have a great answer for that, but I'll tell you what I tell LPs is that we're hedged against Iran to some degree with the amount of the value chain that we own with our companies, and then the amount that we can export if that depreciates. So the best example there is our footwear companies, G-step equalization. During the U.S.-Chinese trade wars, more people were knocking on our door because they're like, we need to de-risk from from China, obviously with COVID. Right. And then by owning more of the value chain in country, we bypass various tariffs from importing more of that in China, and then that's become cheaper locally. And then we can export, and right now we're exporting to Australia and the U.S. at a fairly cheap rate. So the more market share we get to, we can be price makers versus takers. But yeah, I would agree. Also, the rand is massively undervalued, so hopefully you'll get a pop there. But maybe that's just my U.S. dollar jealousy. Now that I've been here 8 years, focused. Tried to get Bain to pay me in dollars, but they insisted on rand. But I think that's a fair question.
So we're just at time. If you have 2 more minutes just to kind of wind down, I'd love to just get maybe quick response. What your thoughts are on what is kind of overestimated and what is underestimated in relation to investing in Africa. I think we're starting to get more hype. We saw the exit of Paystack. This, of course, is for venture capital, but I think given the lens of work that you all are doing, what do you think are maybe like a quick watch out, but also maybe a perspective that lots of folks aren't thinking about? And it may have been something that we discussed already to kind of summarize, but curious what feedback you would give folks that are interested in starting a fund or just interested in engaging in some level.
Great. Yeah, I think I would just underscore the fact that I would agree that VC gets a lot of attention and rightly so to some degree. M-Pesa, Leapfrog, all these buzzwords, and now awesome. More things happen. Even MFS, some friends work there. But it's almost like we've leapfrogged the capital infrastructure that is the U.S. I mean, if you look at where a lot of the money is allocated, it's these kind of mid-tier PE funds that are all over. Like, there's so much massive opportunity in these sectors that the private capital markets do ignore. And then it's a fairly risk-averse banking, financial services world. So somebody that is churning out solid EBITDA, every year can't get that line of credit and actually would take some equity. They wouldn't necessarily call it working with a private equity investor. They would just, find, equity can be cheap because it is, it's fungible and it's agile in that respect. So, I'm a big believer in tech, but in 2020, investing in tech is like saying you invest in electricity in the 60s. So let's not forget that
when you put it like that,
so many massive opportunities that will be enabled by a lot of that's going on, and it's a huge market. And yeah, we're seeing that with. Did I think 8 years ago when I moved here, I'd be investing in a wig company? The wigs in South Africa alone, let me do the, are about it's about $1 billion market in South Africa alone.
Wow.
As far as I know, we're the only private, professional investors invested in this market.
Mm-hmm.
And the consumer isn't educated via marketing, so there's no brand salience. It's a massive market where consumers lied to. There hasn't been a lot of innovation, and yeah, like you should attack that market. The biltong market is packaged biltong alone, packaged, is $300 million. If you add all the other kinds of biltong that we sell, it's again probably it's 3 times that. And I remember talking to the market leader who only had 6%. This is when we were doing diligence. Oh, we refer to it as passive marketing. By that, they just meant they were in the store and they're not doing it. So there's so much opportunity, whether you're borrowing from the D2C trend in the US or a lot of the innovation. And I think that's awesome because these are the heartbeat of the economy, and these employ people that are for 9-to-5 jobs, not gig economy jobs. Mm-hmm. So I just think that to me, it's just that inefficiency or that lack of a focus is exciting and misunderstood, and that's one of the reasons we're doing it. If people weren't looking at crypto, maybe we'd be investing there, but plenty of people are doing that, and plenty of people know more about it than I ever will. So this is what we're doing, and it's really fun.
Unfortunately, we didn't even get into how you all are looking at regional expansion, because I think even taking this model at scale is worth its own conversation. But certainly hearing you on, looking at the markets that no one's really looking at, because that's where, there are some massive opportunities. Kule, I wanted to also give you an opportunity to respond to the question around what are people not maybe thinking about, or what should they keep in mind?
Oh, I feel like Brendan really touched on what I wanted to say. I think a lot of investors, same team, a lot of investors see the African market as just a startup market. All the funding needs to go to the startup space. But there's a real need for this. They are grown and developed businesses that need to go to the next step, and we need the funding to take the businesses to the next step and really localize, and that's where the big difference is going to make. These are the businesses who you add 3 more workers, that's 3 more homes that are being provided for in the economy, and it makes a really big difference. So I think that would be my main understated.
Awesome. Thank you both so much for spending your evenings with us. This was super insightful. I hope for folks in the audience that they also found this very, very interesting and eye-opening as far as, alternatives to VC that exist to invest and really create both financial returns and really sizable social impact. Thank you for the work that you're doing. Thank you for spending your time. There are a couple of questions we didn't get to, unfortunately, but I will try and respond to those offline. What's a good way for folks to be in touch if they have questions or want to engage or just want to connect?
Go ahead, because I love it.
Please don't share your TikTok again,
please
I
don't
was
share your
going
TikTok.
I was going to share my TikTok details. No, I'm just joking.
Please do.
Just joking, just joking. I think our website is the best place. Our contact details are there. Mine is guche@sechacapital.com. And happy to just answer any questions and reply to any emails from there that anyone has. Yeah, I'm also really good on LinkedIn, so that's a good
Awesome.
place. Yeah.
Great. Well, thank you both again so much. Looking forward to keeping this conversation going. Thank you all to the attendees. Have a great.
And if I could, Alicia, one last plug. Sorry, I don't mean to cut you off.
No, go for it.
Yeah, we are going to be looking to hire operator investors that are local. So Mozambique, Zambia, those probably be our first two investments, and then the rest of Southern Africa. But that's probably P1 for now. If you know anybody great that has lived in Mozambique, speaks Portuguese. Alicia, I know you speak like 8 languages. Is Portuguese one of them? I can't remember.
Well, I wish 8. My dad speaks 8. We're working on it. 4.
I'm American, so I speak 1. Yeah, that's we're on the lookout to talking about the regional expansion. That's a priority for us because we need boots on the ground that understand the local markets. To your point earlier, Alicia.
Right.
I'm sorry for cutting you off.
No. It's an important plug. Hopefully there's some folks in here that may be following up with you about that. So I think with that though, we'll close. Thanks for hanging on for these couple extra minutes. And yeah, have a great rest of your day, everyone.
Thank you.
Thank you.
Bye.
Bye, everyone.